Hello, everybody, and welcome back to the Dash Trader Newsroom. And this particular issue is on world market recovery and review. So the world is open again, and we're back at it as well. My name is Michael DeJoy. I'm Director of Educational Services and licensed professional trader here at Dash Trader. I'm joined by my co-host, Jill Molandrino, global markets reporter from Nasdaq. Jill, how are you?
Good, doing great. Always good to see you on a Friday.
Yes, great end to our week. And again, we have the standard old issue keeps coming up this year. We've been dealing with this issue for quite some time. Inflationary concerns continue as key indicator shows the biggest year-over-year increase in 3 decades now. Is this a short-term problem, as the Fed seems to be alluding to and our Treasury Secretary seems to be alluding to, or is this potentially even a longer-term, bigger problem than they are making this out to be? Because it's pretty concerning. This has been we've not had inflation like this in 30 years.
Well, I guess the market isn't too concerned with it. I mean, we hit all-time highs. We're seeing volatility metrics move lower. So I guess you have to ask yourself, as a market, a bit complacent here. I think we spoke about this last time too, but I think what's happening here is we know there's supply shortages. It's everywhere, and I think it's only getting worse. We know that there is a ton of demand out there. I mean, Mike, you heard about it all week. They had to cancel flights. They didn't have enough pilots and workers to support the kind of demand. And I think what the Fed is thinking, once pandemic unemployment assistance goes away in September and kids go back to school and all that, then you're going to see that supply come back into the system. So perhaps they don't have to do anything because the inflation issue will balance itself out. And I think that's probably the direction that they're going in, because things are certainly going to change in September. That's the expectation anyway. I think one thing that the Fed doesn't have control over is when we think about global shipping. We heard what happened at Home Depot, I believe Walmart, maybe it was Walmart, one of the two, and then other big box retailers are actually getting their own containers, their own shipping logistics together, because what's happening in China, and then just this shortage that we have, they're not able to keep up with the demand, and that's something that the Fed can't control. So it was kind of like a mixed bag, but the market appears to not be concerned.
Yeah, so I think that's a great point. So, we always watch what the news is the news, and then the truth is evident in the price, right? The truth as it is to the market, right? And, as a trader, I always like to take this, and I think one of the value adds that we do on this show is that we kind of give the practical, usable, the trader usable value from the news. I'm thinking about this as a trader, and yes, okay, inflation is a problem, but from a trading perspective, where can I put money? There's nowhere to put money. So inflation is a problem. If I leave my money in the bank, I'm going to get zero. If I put my money into the markets, at least there's a chance of me outpacing inflation. So I say this is the no other logical alternative, not New Orleans. This is the NOLA trade, but not New Orleans. No other logical alternative. There's nowhere to put your money. If you buy bonds, interest rates could potentially go up to keep pace with interest rates. Bond prices go down. If you put your money in the equity market, there is a chance that you could see higher prices that keep pace with inflation. The only other thing that I can think of is commodities, and I really want to hear your view as to what's going to happen potentially with commodity prices, because I am starting to see commodity prices creeping up. Certainly, oil has had a tremendous trade off of its lows. We have an infrastructure bill that just that is in the works or getting close to being passed. That should affect the commodity prices. So my view is what's your opinion about commodities? Because potentially, besides for the stock market, that's really the only other place that you could potentially put your money.
I agree with you there, but I will say 2020 and 2021 have certainly been the years for active management. For a while, passive was in vogue just because the market was all going in one direction. Every sector, every stock is kind of, for the most part, going, from the bottom left to the top right. So this definitely is a stock picker's market. It definitely is an active managers market, which is really for a number of the portfolio managers out there. But yes, oil is going up, but we have seen a retraction in other commodity prices as well. I think we've kind of top ticked a bit there. Mm-hmm. Are they still high? Yes, but they certainly have come in.
Yeah. Gold is certainly.
I'm sure the dollar impacts that as well.
Yeah, absolutely. So very, very interesting to continue to watch commodities. And certainly I agree with you that this is definitely, I think 2021 will definitely be a stock picker's market as the year continues. It's going to be very, very key. I mean, you could already see money rotating out of one sector into another sector and being shifted about. I don't really think that a clear trend has been illustrated yet. Personally, I'm very, very interested to see how this next earnings season is perceived, because we are entering into yet another earnings season. As a trader, that's my favorite time of year. On a fun note, we have space. Is space the final frontier? We have Virgin Galactic getting FAA approval to fly passengers into space. So what are your thoughts on the little space race between Jeff Bezos and Richard Branson?
Well, I hope you guys make a lot of money in your trading accounts because it's very expensive to get there.
Yeah.
It's, from a science perspective, human ingenuity, what these people have been able to do is quite remarkable. I mean, I don't even know how to express that more eloquently. I can't even wrap my head around it, to be honest with you. I can't imagine that the human brain is capable of doing these things. It's just so remarkable. Anything even remotely close to rocket science, physics, that's I totally out of my realm of understanding, probably page 1 on the book, but it is just quite remarkable. I don't know if I take the first flight. I don't need, but not that I can afford it, but it's amazing. I feel like I'm stuttering here, but I don't even know fundamentally like how you assess this when it comes to the company. I mean, it's great things and it's certainly innovative, but how do you value those metrics going forward? I think really is going to be what we need to understand more.
Yeah, I think it's completely all at this point. It's just hype and exciting for people to conceive this and envision it. I mean, I'm just looking at it from, again, a trader and investor's perspective. I mean, there's a tremendous amount of opportunity there for resources, et cetera, to be developed. It's a long way off, but it's definitely an exciting market. And most of the companies, with the exception of Virgin Galactic and a couple of others, most of them aren't even public yet. These are like SpaceX is still considered a venture capitalist endeavor. So there's a lot of upside, and really, we saw the amazing growth brought on by the onset of the internet and technology, and potentially space, and all these different space ventures are going to be the year for the financial markets to develop. Okay, U.S. markets make new highs. I kind of touched upon it before. No other logical alternative. U.S. stock markets hit record new highs as Bitcoin and other cryptocurrencies crash. What's in store for the rest of the summer? So I'd love to hear your thoughts specifically on the digital asset market. I know you and I are big believers in digital assets, both of us, but certainly they've been under a lot of pressure from obviously some well-known names hyping them and talking about them, and then obviously just China. I mean, really, just to say it what it is that China has been cracking down on the Bitcoin miners, which has put the entire sector under pressure. So I'd just love to hear your thoughts on the U.S. markets making new highs, and of course, conversely, cryptocurrencies really getting a bit, being put under a bit of pressure lately.
Yeah, well, it's a little bit of a challenge as a hodler here, although I'm not in Bitcoin.
You're an Ethereum person, I think, right? And a DeFi.
I am an Ethereum person. I appreciate the technology story and how DeFi is being built on it more than I do the store of value conversation, because of course store of value can be very arbitrary, as you know. But I think how Ethereum is working to build out what's inevitably going to be a big part of our financial banking system, if not the future of it. And we're seeing it happen now where legacy institutions are moving or at least integrating into DeFi and other fintech type of platforms. So I get it. Like I understand that use case. The store of value, it's not as concrete, but look, it's a volatile asset class. There is an entire ecosystem, of course, traded off exchange. You could trade options on these. Of course, you have to go through
absolutely. I traded
account and your VPN and everything. I mean, there is a significant ecosystem, and that is certainly where the opportunity is. Look, just because the price is volatile and it's moving lower, it doesn't mean people aren't getting in and out and trading it like they would a stock and looking at levels and trying to understand the fundamentals. I mean, it's definitely an asset class. It's definitely being traded. So that's one thing. But Bitcoin, the problem is when you have something that's like, for example, when you're getting a tissue, I'm getting a Kleenex, when we used to photocopy, I have to Xerox something. When you have, there's a term for it, I can't remember what it is, but when you have something that's synonymous with the asset class or the product, the news cycle analysts are going to marry it to that. And I think for the space to continue to mature, the decoupling from Bitcoin will be part of that narrative.
It's a great point. It's really a great point. That Xerox also went bankrupt, right, for a while ago, right? Kodak was synonymous with film, and right, I mean, Kodak certainly didn't do too well there.
Okay, here's a better analogy. I'm going to Google it. I'm not going to search it. Right?
Yeah, exactly.
Right.
Yeah, you're right. Yeah, perfect. But you're right. For the industry to be mature, it needs to, the digital assets has to be decoupled from Bitcoin. It has to be the digital assets sector and digital assets in general, rather than people just talking about Bitcoin, because Bitcoin does have some negative connotations used as a store of value, but also as a payment system for drugs and guns and other things in the past, right? And certainly still today. So I do see what you're saying in terms of, for it to mature, it's people need to perceive it as a bigger asset class, the digital asset or cryptocurrency asset class. And that makes good sense. I just had one last question as it relates to the US economy. Do you think that this, they said, I guess it was the CDC and the Biden administration came out saying that they were not going to extend the moratorium on evictions anymore after this latest extension? Do you think that that is going to have an effect on the market when it actually comes into play? Because obviously the market's still making new highs. Do you think the reality might set in when it actually comes into effect?
That's a great question. I think it'll impact certain areas of the market. I was actually listening to an interesting segment today. The smaller landlords, not your big buildings like the ones that you see in the REITs or the big apartment buildings that we have in the city where they're owned by these massive conglomerates. It's the smaller landowners that perhaps have a multifamily home or a smaller apartment building that will be impacted, and they didn't get PPP, right? So what happens there? It's a domino effect. These smaller landlords are going to throw their hands up in the air. They're going to sell their multi-housing units to BlackRock, right, or whatever conglomerate that's out there. Then you're going to widen the gap even more, because that's multifamily houses and those kind of landlords provide affordable housing, right?
Yes.
If they don't exist, people can't afford to rent homes. So it's not just like how will impact the market. It's going to impact people's livelihoods and alter the housing sector and the multifamily sector as well. So I think that is the initial short-term, the first domino to go down, if you will.
Yeah. So I guess we're going to have to just wait and see how this plays out once we get to August, because like in New York City, I mean, all these big conglomerates, they didn't even budge on their pricing, even though they've had tons and tons of units, just sitting there empty during the entire pandemic. I mean, all these big building conglomerates, they didn't change their prices, but it was all the smaller, all the smaller landlords that really did reduce their prices. And now they've reduced their prices. Things are coming back, and they've locked into some leases at lower prices. So that's certainly going to affect them, over the near term for sure. But listen, on that note, I want to wish you a wonderful weekend as I jump to the charts. It's been another great session, and have a great weekend.
Awesome. Thanks. Take care, guys.
Bye-bye now. All right, so I'm just going to bring up my Dash Trader as we take a look at some of our charts. Okay, so this is my Dash Trader platform, and I'm just going to take a look at some of the prevailing charts here. My indicator of the day and for this session is the moving average crossover. And I just want to point this out. So this is BAC. The chart that I have up here is BAC, but I'm going to just bring us up to the S&P so we can go through the S&P first. Let me actually I'm going to do the DIA this time. So this is the DIA. So we see here that we've had a crossover. So the actual indicator is moving average pair. So if you want to bring this up on your Dash Trader and configure it, go to Study Configure, and you find moving average pair simple. And I set my moving average pair to simple and 10 and simple 20. And just want you to see how you can configure it. So it says, you can just color code the two moving averages. If you want to change the periods, you can do that here. And then the thing that you should do, in my opinion, is to click the box that says show crossover arrows and play alert sound when crossover occurs. Because I'm literally sitting here watching my trading software, but I might be doing other work or something else, and I may not be paying attention to my computer, but I want to know when an intraday crossover occurs. And I'm just going to bring up the 5-minute chart. And you can see right here at the open, we had a crossover on the moving averages. So very, very quickly gave us an indication that the markets were going up. We gave another viable pullback right at the crossover here. And then certainly you can see how we've gotten very, very effective signals when the 10 and the 20 period moving average cross over each other. I'm just going to bring up, so this is the DIA on the daily chart. So we've had a significant pullback when inflationary concerns kind of took over the market. Just want to make sure that everything's sharing properly. So we had some inflationary confirms taking over the market, and that was a pretty big drop. That was the first time in a long time that we've had a moving average crossover. We've now rallied back to the point from which the crossover occurred. So we've had a significant rally back up. The key now is going to be to watch whether or not we make a new high, because from here, we made a new low, and then now we've made a lower low. We made a high. We failed to make a higher high on the Dow Jones, which is usually a somewhat bearish indicator. Now let's take a look at the Nasdaq. This is the QQQ. So we've had a tremendous, let me just make sure that we had a little bit of a sell-off on the Nasdaq. We had another moving average crossover here, but then we had a failure to break down, and we've really just squeezed to the upside once again. So technology has made a new high. This was our high. We made a new high, and we made yet another new high, and we've been making pretty much new highs every day. That is still very bullish as far as the Nasdaq goes. I'm just going to zoom out a little bit. Okay, and pretty much we're just breaking out on the Nasdaq as well on every time frame. Let's take a look at the GBTC. Okay, this is the GBTC. I'm just going to go through data config. I'm going to go back a little bit more if I can. That's the amount of data that I can go. All right, so this is GBTC. This is the tracking stock for cryptocurrency and Bitcoin. You can see we had a very major crossover here. We crossed over, dropped, and we've kind of continued to go down each time, making a new low. This is actually almost the inverse of the Nasdaq, where we're still making higher highs and in a bullish phase. Bitcoin and its tracking stock, GBTC, actually is negative. It's in a bearish phase, and it should technically continue to make new lows. As long as it keeps making new lows, it should make each new low should bring a new lower low, lower highs as well. So it is pretty firmly in a downtrend until it bucks that trend that is fairly bearish and negative. Next, I'd like to take a look at USO. Okay, USO, I mean, this is about as bullish can be. You have the crossover of the moving averages occurring right here at 45, breaking out and moving higher all the way up to 50. Oil has just been on a tear. This is not uncommon. Commodity prices are moving up. Demand is moving up. Really, oil is the recovery trade. As things recover, things are moving again. Demand for oil has increased, and obviously production and supply, things like the Colonial Pipeline that was shut down due to a cyber attack, as well as just a reduction in refining and et cetera, have really cut down the supply of oil. So we have supply reductions as well as demand increase. So oil has been a really solid and good trade going into this recovery. Now, the question is how long it will continue. Certainly, I think the recovery is booming and should continue at least for the duration of the summer. So let's just jump and let's take a look at some of the stocks for the infrastructure trade. This is Caterpillar. Caterpillar initially got knocked down a little bit, but since we've had the talk of the infrastructure bill, Caterpillar has kind of bounced off of that initial drop. This is a stock that's been under pressure for a period of time, but it certainly made a good run, like most equities have lately. In the short term, it was under a little bit of pressure, but certainly it's bounced back nicely. I would be looking for Caterpillar to put in a double bottom and to continue to move higher, depending on what the outcome is on this infrastructure bill. Certainly, we have not yet crossed on the weekly charts moving averages as of yet. So we'll have to see if Caterpillar rebounds or if it stays underneath the moving averages, in which case it would be much more bearish for it to stay under the moving averages. Another stock that I think that we should just keep an eye on is U.S. Steel. This is another infrastructure stock. Certainly it has done fairly well as of late. Certainly has held up pretty well. But potentially a big beneficiary of the infrastructure deal. If the United States starts investing in more infrastructure and building projects start up again, that would be a real serious increase in demand for a steel producer like U.S. Steel. Another stock, FCX. This is an aluminum and gold producer. So certainly another possible beneficiary of the whole infrastructure deal. So certainly keep an eye on that one as well. We have Amazon's earnings coming out next week. So I did want to mention that Amazon has already made a tremendous run pre-earnings, and it might be pulling back into a good buyable level if it's going to make another run. So Amazon's earnings announcement is on the 29th. Today's the 25th, so we have Saturday the 26th, 27th. So you're talking around Tuesday, Wednesday. Still enough time for Amazon to make a nice rebound. It did have a little bit of a pullback the last couple of days, but certainly Amazon looking good for an earnings run. It's already made one, but this would kind of be the end of the run going into its earnings report, which is coming very, very soon. So some interesting stocks for us to look at. Now let's take a look at Apple. Apple has certainly done well as of late. There's been a lot of talk on Apple about the China exposure. Apple's China exposure was a big concern, but because they sell a lot of iPhones in China, et cetera, and they have a lot of supply and manufacturing in China. But it seems like that concern has been abated somewhat. And certainly the price of the stock confirms that, as Apple has kind of put in a little bit of a bottom, and it has gotten above its moving averages again, and looks to be moving to the upside. That's another one that's interesting to watch going into the earnings report. Last one is TSM, Taiwan Semiconductor. This is Taiwan Semiconductor. They were a big supply chain. They were having a lot of supply chain problems. Stock looks to be stuck in a range. Usually when a stock is in a range, what I like to do is I like to bring up a study that is a very, very helpful study that when a stock is in a range and potentially might break out. And I'm just going to take away these one set of lines. Okay, so this is the Bollinger Bands. So be watching to see if Taiwan Semiconductor breaks out. It's been kind of constricting in a tight range. And if it does break out or break down, I think it's more likely to break out. I mean, certainly being a supply chain bottleneck is not a good thing. But if they can overcome some of these issues, then they can certainly take advantage of price increases, and a little bit of the demand problems could work to their advantage. Now, it also could work to the advantage of AMD, Advanced Micro Devices, which looks like it's about to break out of its range. If it can get above 89, then AMD could certainly make a nice move to the upside. If you look, the price, it's very easy for AMD to get back up to retest this 100, which usually when a stock gets to 85, it's going to make a play for 100. NVIDIA was a great example of that. I mean, NVIDIA has just been up and away. And NVIDIA is another semiconductor company. They are a little bit more of an AI, artificial intelligence company as well. Certainly have a lot of seeds planted in that area, which is part of the reason why it's so highly priced and has done so well over time. So certainly keep an eye on NVIDIA as well. I'm going to jump back to my presentation just to go over a few more items before we wrap it up for this week. So the Independent Trader Giveaway starting next week, 6/28, we will be having an Instagram giveaway to celebrate Independence Day. So be sure to follow us on our Instagram page at DashTrader, and certainly follow the post instructions to enter. The giveaway will only run from 6/28 to 7/4, which is July 4th. So certainly act fast to get in on our Independent Trader giveaway. Follow the rules as they are indicated on our Instagram page. Now, also, today we will release the final video of our 8-part series on the technicals, the advanced technical indicators of DashTrader Pro. Very, very happy to have finished that entire educational series. Certainly check us out at DashTrader Pro on YouTube. If you haven't already subscribed and asked for the alerts by clicking on the little bell, you should certainly do so. Visit our DashTrader Pro YouTube channel to view all of those educational videos. And what's even more exciting is we also have another series of educational videos already in the works. That is our trading styles series of videos. It talks about all the styles of trading, everything from core trading to swing trading, which is 3 to 5 day hold in trading. We also talk about the intraday style of trading, technical day trading, gap trading, scalping and momentum trading, as well as trading earnings trades, earnings runners, and gap trades. So we have a whole host, 8 styles of trading that we talk about, 7 styles of trading, but 8 educational videos coming right up. So you definitely want to subscribe to the DashTrader Pro YouTube channel. Stay up to date with all things DashTrader by signing up to our monthly newsletters, as well as our updates on our various blog posts. Simply fill out the form at the bottom of our webpage, www.dashtrader.com. Subscribe to our YouTube channel at DashTrader TV and DashTrader Newsroom reminders. And certainly, if you haven't already done so, follow us on our various social media outlets on LinkedIn, Twitter, Facebook, and Instagram. On that note, everybody, have a wonderful, wonderful weekend and a fabulous 4th of July holiday as well. See you next time.